The High Yield Crypto Proxy, a comprehensive guide to the YieldMax MicroStrategy Option Income Strategy ETF, MSTY. As of March 15, 2026, the digital asset landscape has entered a phase of institutional maturity, with Bitcoin hovering near all-time highs and MicroStrategy, MSTR, cementing its status as the world's largest corporate holder of BTC. In this high-octane environment, the YieldMax MicroStrategy Option Income Strategy ETF, ticker MSTY, has emerged as one of the most talked about and misunderstood vehicles in the retail investment world. MSTY is not a traditional investment. It is an engineered yield product designed to transform the extreme volatility of MicroStrategy stock into a massive stream of monthly cash flow. However, with astronomical yields comes astronomical risk. This deep dive will break down the synthetic mechanics of MSTY, the volatility harvest of 2026, and the critical warnings every investor must heed before entering this high-stakes arena. 1. What is MSTY, the synthetic cash machine? MSTY is an actively managed ETF that does not own a single share of MicroStrategy, MSTR. Instead, it uses a synthetic covered call strategy. To understand MSTY, you must understand its three-layer architecture. 1. The synthetic long position. The fund managers use a combination of call and put options to mimic the price movement of MSTR. This allows the fund to participate in the upside and downside of MicroStrategy without actually holding the underlying stock. 2. The yield engine, short calls. This is where the cash comes from. The fund sells or writes out-of-the-money call options on MSTR. In exchange for selling these options, the fund receives premiums, cash. Because MicroStrategy is one of the most volatile stocks in the S&P 1500, the premiums are massive. 1. The collateral, treasuries. The cash used to back these options is held in U.S. Treasury bills, SGVOV. In early 2026, with interest rates remaining sticky near 4.5%, this collateral provides a small but steady layer of additional income for the fund. 2. The 2026 context, the MicroStrategy Bitcoin multiplier. Why is MSTY so popular right now? In March 2026, MicroStrategy has evolved into a leveraged bet on Bitcoin. The volatility harvest. For MSTY to generate its signature high yield, it needs volatility. MicroStrategy is currently the perfect candidate. Because MSTR trades at a significant premium to its Bitcoin holdings, its stock price swings wildly based on BTC price action, corporate debt issuance, and market sentiment. The premium play. When Bitcoin is trending upward, MSTR often outpaces it. This delta creates massive demand for MSTR call options, which in turn drives up the premiums that MSTY collects and pays out to you. 3. Performance and dividend vitals for March 2026. MSTY is known for headline yields that often exceed 80% to 100% on an annualized basis. However, as your researcher, I must clarify that these numbers are highly variable. The financial scorecard as of March 15, 2026. Current market price is approximately $22.45. Monthly distribution, the most recent payout was approximately $1.85 per share. Annualized distribution rate, currently oscillating between 85% and 110%. Net assets, the fund has grown to nearly $1.4 billion, reflecting the massive retail appetite for crypto-adjacent yield. The total return reality, Investors often make the mistake of looking only at the yield. In 2025, while MSTY paid out massive dividends, the net asset value, NAV, of the fund suffered during periods when MicroStrategy stock dropped sharply. This is known as NAV erosion. In a down market, MSTY can drop in price faster than it can pay you in dividends. 4. The hidden mechanics, the capped upside problem. The most critical thing to understand before investing in MSTY is how it behaves in a moon scenario. If MicroStrategy's stock price skyrockets by 20% in a single week, as it often does during Bitcoin rallies, MSTY will not follow it all the way up. The cap is that because MSTY has sold call options, it has sold away the upside above a certain price. The downside, conversely, if MSTR drops by 20%, MSTY has full downside exposure. The premiums you collect provide a small cushion, but they cannot stop a freefall. The verdict is MSTY is best suited for a market that is moving sideways or slightly upward. In a vertical bull market, you are better off owning MSTR. In a vertical bear market, both will hurt, but MSTY will give you cash while you suffer. 5. Critical risks, the 3 horsemen of MSTY. As your AI researcher, I must highlight that MSTY is among the highest risk ETFs in the public market. Bitcoin crash risk. If Bitcoin enters a 20% correction, MicroStrategy, MSTR, often drops by 30% or more. MSTY's NAV will be severely damaged, and even a 100% yield won't save you from a massive loss in principal. Volatility contraction. If MSTR stock becomes boring, low volatility, the option premiums will shrink. This would cause the monthly dividend to drop significantly, likely leading to a mass exit by yield-hungry investors. Return of capital, ROC. Sometimes, when a fund cannot generate enough premium to cover its promised payout, it simply hands your own money back to you. This lowers the fund's NAV and can create a death spiral if not managed correctly. In 2026, regulators are looking closely at YieldMax products to ensure they are disclosing the percentage of ROC in their payouts. 6. Strategy: how to position MSTY today. In mid-March 2026, the smart money is treating MSTY as a tactical income satellite, not a core holding. The 1 to 2% rule. Most professional researchers suggest that MSTY should occupy no more than 1 to 2% of a total portfolio. It is a speculative income play. The income generator play: if you already own Bitcoin and want to harvest some cash from the crypto ecosystem without selling your coins, MSTY can serve as a monthly income generator. The reinvestment strategy: if you don't need the cash for bills, reinvesting the MSTY dividends into safer assets like SGVAV treasuries or VT global stocks is a popular way to de-risk the high-yield gains. The technical support: MSTY has shown a floor near the $18.50 level. If MicroStrategy volatility spikes and the fund drops toward that range, it often represents a high probability entry for a short-term yield capture. 7. Tax considerations, a warning. Because MSTY's income comes from option premiums and short-term capital gains, it is generally taxed at ordinary income rates, not the lower long-term capital gains rates. This makes MSTY a much more efficient holding for tax-advantaged accounts like an IRA or 401k rather than a standard taxable brokerage account. Conclusion: the High Wire Act. The YieldMax MicroStrategy Option Income Strategy ETF, MSTY, in 2026 is the ultimate high-yield experiment. It allows you to participate in the excitement of the Bitcoin era while receiving a monthly check that can be life-changing for some and devastating for others. The verdict is, you are not buying a safe dividend stock. You are buying an option trading strategy packaged as an ETF. If you believe Bitcoin and MicroStrategy will remain volatile and move generally upward, MSTY is the most powerful cash flow tool in your kit. But if the crypto winter returns, MSTY is a very dangerous place to be.